two negatives equal a huge positive. In this educational episode, I'm going to talk about how to pay simple interest tax deductible and earn compound interest tax free. And I'm going to explain to you how two negatives can turn into a huge positive. Get ready, put on your seatbelt. So I'm Doug Andrew. I've been a financial strategist and retirement planning specialist now for nearly 5 decades, helping people optimize assets, minimize taxes, and empower their authentic wealth. I've been very honored to have authored thus far 12 best-selling books. My very first book was titled Missed Fortune because of the fortunes people miss out on when they simply don't know what they don't know. It became a bestseller. It got the attention of Warner Business Books. They became my publisher and commissioned me to write 3 additional books, which also became bestsellers. Now, in every one of those books, I talk about how money works. Ever since the mid-1970s, I've been teaching people how I use what is called the banking concept for my own money. And I've been teaching people how they can use these concepts to be able to become their own banker. In fact, chapter 7 of my 3rd book, which became a New York Times and Wall Street Journal bestseller, it was called Last Chance Millionaire. Chapter 7 of that book was titled Learn How to Become Your Own Banker. And so in that, I was talking about how to take 2 perceived negatives and turn them into a positive. So simply with math, if you took -2 plus -2, it equals a +4. Well, what do people perceive as a negative? Most people view paying interest, let's say on a loan or mortgage on their house, as a negative. And so they want to hurry and send extra principal payments against the mortgage to hurry and get rid of that interest as fast as possible. Now, when you think about it, a bank or credit union's greatest asset is their liabilities. If they stopped paying interest, they would wither up and die. See, they understand how money works. They pay interest in order to make more interest. They're very happy to pay us 1 or 2 or 3% to borrow our money, OPM, other people's money, because they turn around and loan it back at 5, 6, 7%. And so would you pay an employee, let's say, $30,000, if that employee made you an extra $60,000? Well, that's what I'm talking about. Banks pay maybe 3% to you, 3% interest. On $1 million, they pay $30,000 a year in interest, but they turn around and they loan your money that you loan them out, and they earn, let's say, a net of 6%. How much more is 6% or $60,000 than the $30,000 they are paying you? It's not just $30,000, it's 100% more. It's actually an infinite rate of return because they view paying interest not as a negative. They view it as a positive. If they did not pay interest, they would not be able to make 100% rates of return, twice as much as they're paying. Okay, so what's the other negative? Most people view having insurance on anything, your car, your house, or your life, as a negative. In fact, I've heard so many people for the last 50 years call insurance a necessary evil. Well, they simply don't understand that if you use life insurance as an investment, if you actually accumulate your money tax-free by overfunding the insurance policy, they begin to understand that you can become your own banker by putting money into an insurance contract and maximum funding it. And I have been able to earn net rates of return after the cost of the insurance, averaging 8 to 10% ever since 1980. So let's just round that down to 8 because I've actually averaged 9.62, and ever since 1997, I've averaged 11.17, a net cost of over 10%. Let me just round it down to 8. So if I have this negative where I'm, borrowing or paying interest on $1 million loan, let's say, and I am borrowing money even at 6% interest, and if that's tax deductible interest, then it's only a net cost of 4% in a 33% tax bracket. Because on $1 million loan, I'm paying 6% interest, that's $60,000 a year. That offsets, as I deducted on my tax return, that offsets $60,000 of income. I would have paid a third in tax on $20,000. So I get to save $20,000 of tax by having that write-off. So if I borrow at 6%, it's a net cost of 4. So I am paying actually $40,000 on $1 million, but I'm earning 8%. That's $80,000. How much more is $80,000 than $40,000? Don't say 4%. It's 100% more. It is doing exactly what banks do to make millions. Okay, they pay $40,000 in interest to make $80,000, and they do it over and over and over again. That's called the velocity of money. And I can prove to you mathematically, if you do that over and over again over a 30-year period, you will be earning compound interest tax-free, let's say at twice the rate, let's say 8%, than the net cost of you borrowing money. Okay, this is why savvy real estate investors do not tie up their own money when they buy real estate. Even if they have the money, they borrow money because it would actually cost them earning 100% rates of return if they paid cash for the business or the property or the apartment complex or whatever. This is why many savvy, high net worth individuals understand this concept. So this is why insurance, which is usually perceived as a negative, actually accumulates your money tax-free at net internal rates of return between 8 to 10%. That's pretty good. It's tax advantaged. And the negative interest actually is not a negative, it's a positive when you understand how to sort of do what banks do. So I've been helping people understand this concept for nearly 5 decades. If this is intriguing you and you want to learn how you can make 100% more or sometimes even 500%. See, a few years ago, I could borrow at 3% interest because of my credit rating, tax deductible. In a 33% bracket, that was only a net cost of 2. And on my indexed universal life, I was earning many of those years 10% net. How much more is 10 than 2? It's 5 times, it's 500%. At the same time, banks were only paying 1%, and they were turning around and putting their money in insurance companies making 5. They were making 500%. They were loaning money out at 5, and they were only paying 1. On every million, they only pay $10,000 a year in interest, and they're making $50,000. The banks were making 500%. I was making 500%. I can't believe how many people missed out on that opportunity because they don't take the time to learn how money works. So if this is resonating with you and you want to learn about how to accumulate your money safely with compound interest on a tax-favored basis, averaging, 8 to 10% tax-free net, and then you can learn how to do what banks do, and you can learn how to have what I call a laser bank. In fact, we have a course, a video course that talks about how you can use the laser bank concept. So this is what you can do to learn. I want to gift you a copy. This is my most recent best-selling book. It's called The Laser Fund. The reason why I picked it up the way I did, because it's actually 2 books in one. This side is about 200 pages, 14 chapters with all the charts and graphs. If you're a left brain learner, you like the numbers. If you're more of a right brain learner, you learn by stories. You flip it over to this book. And this one is about 100 pages, 12 chapters with 62 actual stories of how people have used a properly structured, max-funded indexed insurance contract as a laser bank, where they can apply their money and become mega wealthy by understanding how to apply these concepts that are actually, I didn't originate them, even though I've been teaching this for over 50 years. This is actually in the Bible, okay? The parable of the talents. A lot of people don't recognize that. To claim your free copy of this book, simply go to laserfund, laserfund.com, and contribute a nominal amount towards the shipping and handling. Okay, I require a little bit of skin in the game. I'll cover the rest of that cost, and I will pay for the book. I will send out a hard copy to you. You don't have to pay $20 on Amazon for this. You can read and learn, but if you like to listen and learn or watch and learn, there's options there for audio and video. You can also check out on our website some of the educational webinars we do on a regular basis. You can even put your name in to talk to a specialist with no obligation, no cost, to see how these concepts may apply in your particular circumstances. But this is not about me. This is about you and your brighter future. But this is how you can take two perceived negatives and turn it into a huge positive. And if you're intrigued by what I'm saying, you need to learn more or you're going to miss out, and I don't want you left in the dust.